Hi, talk about ETFs. I'm surprised that many investors are not aware that we have two ETFs that are listed in Nairobi Security Exchange. And I've seen it even for the people who come for my one-on-one. When I tell them about we have an ETF, they're asking, what is that? ETF basically means exchange traded fund. That's what it is stand for. And it's basically a basket of many investment or many shares that it's put into one, or a basket of a commodity put into one. And you can either buy or sell in any stock exchange, including even Nairobi Security Exchange. We have two of them. You buy them just like there you buy normal shares. So in Nairobi Security Exchange, we have the gold. This is the gold. Where is that? Gold, abbreviated as GLD, which is this. It goes between 5,000, 6,000 there. When there is market uncertainty in the market, it goes up. So the gold, this gold tracks the price of the physical gold, the bullion. It's called bullion or bullion. The bullion. It tracks the price of the physical gold. And each unit is backed by the price of the physical gold. And how the price moves, it moves depending on it's based on the gold, on the global gold prices. Why do you need to invest in gold? I call it more of protecting your wealth, or a defensive investment. It's good for protecting your wealth. Then it acts because it's known as a safe asset or a safe haven. You have seen it when the war was at the peak between Iran and USA. The gold prices shot. Why? Because people, when there is market uncertainty, they rush to buy gold because it's a safe haven or a safe asset. It also acts as a hedge against inflation and any economic uncertainty. Does it generate any income? No. At the moment, there are no dividends, but it's good for protecting your wealth. Then we have the other ETF, which we call the SM. This one. Where is that? SMWF. That one. Which, in other words, it's called the Satrix MSCY World Feeder ETF. This one was listed in Nairobi Security Exchange. By the way, if you look at the 1 year, it's not even 1 year. It was listed around August last year. And this one, it's a bucket. It gives you exposure to the global companies like Apple, Microsoft, Amazon. And then it's a basket of, is it 1,300 shares. Yes, 1,300 shares, which are across developed countries. And it's designed for, why do you have to invest in the SMWF? It's designed for long-term wealth building because it's highly diversified globally. You can hear it's like you're buying a basket of 1,300 shares in those developed countries. This one, there are no dividends, returns are reinvested, so no cash dividend. Why do you need to invest in it? It's more of, it gives you global exposure. In fact, it's like a Kadogo SP500 listed in Nairobi Security Exchange. And then it's more for long-term wealth building. Currently, it's trading between 860, 850, saa zingine inaendaga 900 if you check under this. But with the growth, maybe 2 years from now, it will be trading at 2,000. So if you are interested, it's a good thing to diversify, especially if you're not trading globally. You can maybe you can pick to be buying one gold every month, or buying maybe 2 Satrix every month, or even one. You build pole, and then within no time you have built your portfolio, because this more, they are giving you global exposure. At the same time, gold is protecting your wealth. In conclusion, ETFs are good for diversification. They help you reduce risk and they assist you in growing your wealth more steadily. Simply put, investing in ETF is a smarter way to build long-term financial security or wealth. Thank you.